morning, viewers, and welcome to the 6th episode of Your Money, Your Taxes. I'm Paresh Shah, CEO of Paresh Shah Financial Services, and here with me in the studio today is Lalit to ask all our important questions about taxes. I'm going to introduce Lalit first. Lalit Abichandani is a practicing CPA with 25 years experience in the USA. He specializes in US taxation. He's been running a very successful CPA firm in New York. He and his firm provide tax service and tax planning for businesses as well as individuals. In addition to the regular trading businesses, his firm services healthcare, IT industry, hospitality and entertainment industry. He has done hundreds of offshore voluntary disclosures and streamlined procedure cases and has become an expert in foreign bank account reporting and US-India tax treaty. He's a CPA and tax advisor to businesses, professionals, Bollywood industry and a lot of film personalities. His website is yourtaxadvisor.com. Lalitji, welcome to the show.
Thank you, Paresh Shah, and thank you for the great introduction.
Appreciate that. Okay. First of all, we've been talking so far in the previous show about income taxes, but there's been a lot of confusion regarding gift taxes, inheritance, death taxes. So today we want to go into some details about those issues. I have some basic questions that the average taxpayer would like to know, Lalitji.
Sure.
Okay, so I'm just going to jump straight into some of the questions. So first thing is, what is the qualifications of gift? That means, is there a list of relatives whom I can give a gift to? Is there a deduction that I can take on my tax return? Or does the recipient of the gift have to pay any taxes? It's just so confusing. Can you start from there, from the very basic?
Paresh Shah, in US, there is no relationship test, unlike in other countries. So you can give gift to anybody you would like. You can give gift to me, I can give gift to anybody can give gift to anybody else. So there is no relationship that we are bound by. Having said that, the next question that you asked me is deduction. It's a great question. So when you give gift, there is no deduction. And when you receive gift, there is no income tax, meaning when you are doing your income tax, you cannot deduct the gift that you have given. Neither the person who has received a gift has to include that in his income tax. But they do have to report beyond certain limitations. So there are some dollar limitations that if they cross that, then you have to report that.
Thank you, Lalitji. But that again, what your answer as usual leads to some more questions. And what I heard here was something about that, there are some limitations and there's some dollar amounts that a US taxpayer is limited to in terms of how much he can give gift. Can you go into more details and tell us how does it all work?
Okay, so it varies from state to state. We have two layers of taxation in this country, federal and state. So each state has their own laws. We won't get into that. But let's look at the federal. Federal is the bigger chunk of it. And in 2012, US government came up with a generous lifetime exemption of $5 million. And this was also to be increased with the inflation index every year. So every year it increases from $5.5 million. In 2016, it has reached to $5.45 million per person. That means for a spouse, for a married person, it's 5.45 times twice, that's $10.9 million of exemption. And then there are some annual limitations in there.
What about annual gifting? I believe that there's some restrictions or some rules for that also. Can you tell us more about that?
So the US government is even more generous with annual. So each US taxpayer or US resident has a limitation of $14,000 per person per year. That means every year you can give away $14,000 to your loved ones, and this $14,000 does not get deducted from the 5.45. As long as you limit it to 14,000, you don't have to touch the 5.45. So between husband and wife, you can give away $28,000 to your loved ones without affecting the 5.45, which is the lifetime exemption, which you can keep it for later years.
So overall 14,000 per person per year, and beyond that also 5.45 million. So that's a lot of availability to be lot of available amount to be given away. But let's say someone has exceeded that amount, then what is the tax rate and who pays those taxes?
So beyond, so you have 5.45 in your lifetime and 10.9 for the couple. If you are lucky and you are blessed with more money than that, then the government really charges you heavy tax, and that tax is 45%. And the estate of the person deceased has to pay the tax, not the recipient. So the state gives away, takes the tax bill, and whatever is left is going to the beneficiaries.
So when we're talking about after a person passes away, if he leaves more than $5.45 million, then per person, then that is going to be taxed. That is for the inheritance purpose. Can you go back to the gift purposes? So let's say if I have 10 million and today while I'm alive I want to give away 10 million above 5.45, what happens in that situation?
So as long as you have the 5.45 or whatever that number is in that year, you have not exceeded, you don't have to pay gift tax. But let's say if you cross that 5.45 while you are alive, then yes, you have to pay tax. Over and above 5.45, you have to pay taxes, and that taxes, it starts at 45%. And as I said, the state takes care of their percentage as well.
Lalitji, inheritance led me to a very sensitive topic, and that's about how should a couple plan in an unfortunate situation when one of the spouses passes away. And because of the longevity that we have faced these days, normally the husband passes away first and then the wife is normally there. So how should they handle all this confusion? Can you talk a little about this, please?
Yeah, so we have to start with the will. What is the will of the deceased person? So it starts with that. But more often we have seen that most people take the option that everything that a spouse, in normal cases it's the husband who passes away first, so everything that husband owned automatically transfers over to the wife. And there is no limitation in there. Even the 5.45 limitation is not there. If you could have 100 million and that gets transferred without any taxes. It's only the second spouse, when that person passes away, that's when the limitation applies.
Okay. Could you just go a little more in detail, because what happens if there's a 5.45 million limitation for the husband? What happens in case he doesn't use that and things like that,
Well, what happens is when you are doing that, when the person has passed away, you have to make sure that you file proper documentation and tax returns for that. It is called a portability. So the unused portion of the lifetime exemption that the husband or the first spouse who passed away has, that has to be transferred to the wife, and you have to file proper tax returns for that. Okay. And it is known as portability. So make sure that you file the tax returns, or if you need help, we can help you with that.
Okay. So the tax return or the documentation that needs to be filed, you can take care of that.
Absolutely.
Okay. Now, loss in a family is already difficult to handle, and then there are all these formalities about transferring the names, changing bank accounts, the tax documents that you talked about. Do you have any simple solution for that, Lalitji? Can you guide our viewers?
Pareshji, I agree with you. It is very traumatic time. It is difficult time. I myself experienced that 3 years ago. Even knowing all the laws and the requirements of tax filing, I myself was confused. I didn't know where to begin. So I can understand the difficulty and the confusion. So after that, I developed a list of 15 items that you need to inform different agencies and the government and the banks. I can share with the viewers if I get an email from them, or you will find that on my website. That will make life easier.
Wow. That is, I think this a document like that, which gives people some steps to follow, will be very useful. Viewers, please go to Lalitji's website. As I said earlier, it is www.yourtaxadvisor.com, and if you go to that website, you can get this list of 15 items that you should try to work on in order to, and if necessary, you can send him an email at his email address. So Lalitji, coming to the next part, with your experience and knowledge about the subject, what would you suggest a family or even a young couple who's starting a family, what should they be doing so that they can prepare for a crisis?
Paresh, you're absolutely right. We live in an uncertain times. You don't know what's going to happen tomorrow. So my recommendation is three things that everybody should follow, especially young couple who's just starting out. When you have a child or a spouse, you need to protect them. So the very first thing that I would recommend is that for the security of family, you must have some kind of a life insurance. Go with the cheapest life insurance if you cannot afford a whole life, so that there is some protection available to the family just in case if something goes wrong. The second thing that I would suggest is while you're working, even if you are young, make sure that you save some percentage of that in some kind of a retirement fund, whether it is IRA or 401k that we talked about the last time, or some kind of employer-based deferred compensation plan, but definitely start saving early so that you will have enough funds available that you can utilize later in retirement years. And the third one, which I highly suggest, is that everybody should at least have a basic simple will, so that the person's directions are very clear as to what needs to be done. So the family is very clear about it and they can follow those instructions. You can either contact a local tax attorney, or you can contact us. We will help you with that. But a simple will is very essential for both husband as well as wife.
Okay, so Lalitji, that was excellent. I think the three basic thing is have some financial security for the family, start saving money for the retirement, and finally consult a profession to get a basic simple will. Lalitji, I want to get into a little bit of a complex topic which you talked about very briefly earlier, and I think the viewers will find it important to understand this topic. Can you talk a little about the forms that a person needs to file? Let's say somebody has passed away, so there must be some tax forms, and if you can highlight, even if you know a little bit about some of the legal documents, though I know that we are not an attorney here, but at least you can give some guidance as to what a person can be careful about,
Paresh, that's an excellent question. People are very confused what to do. So when a person passes away, his life ends. So his tax year ends on that day. So from the beginning of the year till the person passes away, during that year, you have to file a normal tax return. And after that, the estate takes over. So you have to file a 1041. When you have to file an income tax, the basic form is 1040. But when a person passes away, from that date onwards, the estate takes it over. All the funds and the finances and assets are transferred over into the estate. So the estate then has to file at least that basic tax returns. And then it gets complicated if you have a trust, or if you have other issues that you had planned, or you had done that. I won't go into details of that, but this is very important, and this is what IRS requires, that the state must file a tax return within a certain time period. So you must contact a tax attorney or a CPA who can follow this through. And don't forget the portability that we talked about, so that you can save your $5.45 million of carry over from one person to the next person. Don't forget that.
Lalitji, we are running short on time because these are some very interesting topics. I think you really hit the nail on the head with giving the 15 basic points to people. Viewers, do go to Lalitji's website or send him an email and get that. We thank you all for this great information. I think we'll continue with this topic next time. And in the next episode, we'll be talking about protection. See you in 15 days. Thank you very much.